and of course adding your views to this issue. Of course, it's an issue for all insurance players. How does it affect a company like Lion of Africa when it comes to the key areas you feed into, of course, being specialist engineering and corporate right now?
Well, Lion of Africa, as you point out, are large insurers of corporate business in South Africa. What that means is that we essentially insure large risks with large exposures, and so we often have a need to purchase or to resort to reinsurance purchases from the overseas markets. Mm-hmm. Insurance is essentially a global game, and a loss. An earthquake in Chile ends up being funded by a 0.1% from a small insurance company in Southeast China, for example. And so the cost of natural catastrophes, and when they happen, to global insurers, as we've just seen with the hurricane damage in America, those losses invariably come home to roost, and ultimately is reflected in the costs that insurers then have to pass on to clients. Yeah. South Africa has seen, just in the last couple of weeks, we've seen some fairly big losses of more of a shock loss nature, but certainly, I mean, we've had two massive hailstorms in Johannesburg. Of course, last weekend we had the fires of the thatched dwellings in St. Francis Bay. We had some flood damage, extensive flood damage in the Eastern Cape, and to the South African market, these losses will approximate somewhere around 500 million to R1 billion per loss. Mm-hmm. And that's going to take some substantial recovery. So just from a local perspective, we can expect insurance pricing to be affected and impacted, and certainly consumers can expect to see some kind of leveling out of the very soft market conditions that they have felt. Yeah. The losses coming out of America and in Europe, primarily weather related, and quite interestingly, beginning to show patterns of sort of global warming, and an almost unnatural impact on the severity and extensive nature of the storm damage that markets have suffered. Yeah. And these, I mean, there you're talking in America currently. The best estimate we have is something like $60 billion. And one's got to think about this as coming quite early on in the coming winter season, in America. And an unusual impact of seeing large tropical hurricane conditions at the coast, ending up as snow and sleet and ice conditions further inland, which just exacerbated the damage. Yeah. And again, much like the 9/11 catastrophe from terrorist risks, again, the market is beginning to question just how it quantifies risk and how it quantifies weather-related losses as a consequence of these quite different kind of loss experience that the insurance industry is exposed to, and inevitably, I think that insurers are going to have to look at how they price risk, how they price weather-related risk in particular.
Yeah, I mean, Adam, what does that mean? Sorry, if I could just jump in here. I mean, what does that mean for a player like yourself? Does that mean that you stay away from insuring areas that are more exposed to kind of unforeseeable events like weather-related disasters? How does that affect you? Of course, we know the reinsurance aspect affects you, and of course, general industry trends when it comes to pricing. But does that mean you become more risk-averse in these particular areas?
Invariably you do, and not necessarily risk averse, but certainly I think a lot more careful about the type of risk that you bring on board and the pricing that you might set. We have, for example, in the Southern Cape areas, we have large areas between Knysna and Port Elizabeth, these areas are quite exposed in winter times to rough seas, rough conditions, and prone to flooding. For crop insurers, as a consequence of all of this, the impact of frost on growing crops and so on also is quite acute.
Yeah.
And so what we can expect to see is that those insurers that specialize in those risks, or who tend to insure risks in those areas, will become a lot more circumspect about what they charge, and costing is one aspect, but also the limits of the cover that they might be prepared to give.
Yeah.
And so, South Africans, I think, have been spoiled generally in buying what are seen to be sort of all-in-one comprehensive types of insurance policies. Mm-hmm. Whereas what we see in more advanced economies, Europe, America, and so on, where these risks are very carefully priced and very carefully limited, and quite often, instead of buying one policy to cover your business, there might be 2, 3, or 4 specialist types of insurance. I guess one could also expect increasingly into the future, consumers and business owners alike will have to pay a lot more attention to the issues of risk management and how they manage to bring down the cost of their own risk and the vulnerability of their property and businesses to these types of exposures.
Adam, let's talk
Simply
about Lion of Africa, just because we are running out of time, and I'm very interested to know what your plans are, because, as I said, corporate and specialist engineering, a milestone last year. You reached the R500,000 mark when it comes to net written premiums. You've talked about the impact that regulation is having on your business when it comes to the cost of just adapting to it, of understanding it, of bringing on the right skills to adapt to it. So what are your plans from a more longer-term perspective, a 5-year view of Lion of Africa right now?
Well, Lion of Africa is continuing to build its company. It's continuing to build the expertise, and it's about getting the right people into the business. I think one of the big advantages we have is that as a young company, we are bringing in younger people, new skills. That obviously has an impact of lowering the actual cost of the deployment of the skills in the business. And these people are also learning about the new regulations in almost a level playing field. I mean, for most of South Africa, of the South African insurance industry, we're all learning these regulations as it's being implemented. We still have some way to go. The implementation date for new solvency regulations, for example, is 2015. So we've got a couple of years to adjust. But what we're seeing also are a huge number of regulations which are now aimed at managing market conduct and the relationship that insurers have through their intermediary bodies with customers at the end of the day. The primary purpose and refocus for all of this is to afford consumers better protection and better protection from failure on the part of their service providers. I'm very confident that Lion of Africa, in establishing a particular role and positioning itself in particular market segments, will continue to strengthen and grow in those segments as we then expand and try and attack some of the market share of our more illustrious competitors out there.